Good afternoon, and welcome to the end of week market review for Friday, June 6, 2014. You are going to see that both the U.S. and Canadian markets are rising bullish after a good, strong trading week. Now, all in all, the markets did end up for the week. They also did end up for the last day of trading here. We've got the Dow Jones up 0.52% for the day, with the S&P 500 up 0.46% for the day. In due fashion, when the U.S. markets rise, it is very common to see commodities decline, and we actually have that happening this time around, with gold down 0.02% and silver down 0.38%. Taking a look at oil, though, you are going to see that it is up 0.30%. Taking a look at our economic reports, you're going to see that they were expecting 310,000 filings for jobless claims, but actually, after the fact, we ended up with 312,000 filings. Now, this was more than expected, and it would normally be an indicator for the markets declining. And although the markets did decline for that one day on June 5th, they did end up working themselves around and rising again by the week's end. So here we are taking a look at the S&P 500 on the daily chart. You're going to see clear as day, we're at all-time highs and in uncharted territory. The MACD is rising bullish and with its black line over top of the blue line. Looking at the S&P 500 on the weekly chart, you're going to see that we've never been this high before, and that definitely does make it seem very bullish. And although the markets are bullish, they are also overbought, and that means that the markets do need to pull back. If we look back at the daily chart, you're going to see that any type of pullback would look negative. Going back to that 22 EMA, though, is a good, strong level of support, and definitely a level of support that we can trust. However, it is possible that the markets are going to pull back even further and go back to the red line here on the weekly chart, which happens to be the 26 EMA. If it pulls back to that low, it will look quite negative on the daily chart, but it really isn't anything to be concerned with when you look at it in the weekly perspective. Now we're looking at the TSX on the daily chart. You're going to see that it's now pushed itself up into higher highs, and actually the highest that it's been in for the last couple of years. The MACD is rising bullish and with its black line over top of the blue line. Looking at the TSX on the weekly chart, you're going to see that although we're at some nice highs, we are not nearly as high as we were back several years ago, which is around 15.5. It is very possible, though, that the TSX will work itself up into those highs. It is also important to note, though, that the TSX is overbought and could pull back to its support levels, in this case, the 26 EMA. The volatility indicator is at a nice low level, with it currently at 10.84. This means that it's nice and low, and it means that if the markets do pull back, they're not going to be as significant losses as you might expect. If the indicator starts to rise and get up above that 200 EMA, then it's very possible that we might have larger losses. But as it stands right now, we can expect slow and steady gains and slow and steady declines. Now, if you have any further questions, you can either send us an email or phone call. All of our contact information is on the screen. So with that said, this has been the end of week market review for Friday, June 6, 2014. Ciao for now.